Monitoring Macros.com CIO Joseph Wong. Joe, is the Fed too data dependent at this point?
So absolutely, Charles. Like you mentioned, and as you have been saying, and many of your guests have been saying, the labor market has been slowing significantly over the past few months. We had unemployment rate jump to 4.3%, and historically that means that it's going to go a lot higher. Now, the Fed should have been cutting rates far before today. After all, inflation is only a little bit above their 2% target. Now, they target PCE, and PCE is about 2.7%. There's really no reason for rates to be at multi-decade highs. But thankfully, though, it looks like Chair Powell is finally listening to you because today, Chair Powell clearly pivoted. Now, the market has been suspecting this for some time, but he's clearly signaling that they're going to cut rates starting in September. But it's a bit of a mystery how much and to what extent. That, I think, we're going to have to wait until the September jobs market report.
Okay. And by the way, and to that point, you may get some adjustments on jobs, and they talk about the hurricane thing, but we know historically that jobs start to slow and then they fall off a cliff. And I think the Fed's understanding that. But there was one part that you took issue, it seems like, with Jay Powell, taking credit for keeping inflation expectations anchored. Why shouldn't he get the credit?
Well, honestly, so let's rewind a little bit. 2 years ago, Chair Powell was at Jackson Hole, and he told everyone he's going to raise rates a lot, cause a recession. Unemployment is going to go up, and inflation will come down. But none of that really happened, right? I mean, so far, the economy seems to be okay. Now, he talks about his job, so we're not really sure what the Fed did to get inflation down. Now, Chair Powell was claiming that he kept inflation expectations stable. But the truth is, when people poll the American public, most people have no idea what the Fed does. So the Fed obviously can't keep
and
inflation
that's on Wall Street, by the
stable.
way. That's not even Main Street. That's Wall Street. Who the hell? What do they do, and who are they accountable to? So speaking of belief, though, how shocked were you when you saw those Fed minutes, and the Fed themselves said they're having trouble believing economic data, particularly employment data?
Well, actually, I felt very comforted by that. That means the Fed officials are smarter than we thought they were. They know that's the unemployment data is a little bit suspicious. And as we saw recently, it was revised down substantially. And now I think that probably feeds into their view that they're probably over-tightening, and they got to cut ASAP, which they will do in September.
Joe, before I let you go, less than a minute ago, you've been posting some good information about the election. One thing you said is that VP Harris, that all the plans that she's put out there for right now, they're a recipe for stagflation. Explain to the audience why that's not good, because a lot of folks have never lived through that.
Now, stagflation is awful. It's when the price of everything you pay for continues to go up and you have trouble finding a job. So it's a double whammy, and American people would suffer in a stagflationary scenario. Now, I think going forward, whether or not we have a recession is less about what the Fed does and a lot more about what happens in November, because these two candidates have very, very different visions of how the world looks. Now, President Trump would like to cut taxes. He wants the stock market to go higher. Now, Vice President Harris, she suggested, raising taxes, maybe controlling how much you have to pay for something, how much a business can charge for their products. Now, that we've tried over and over again throughout history as early as the Roman times, and that has always led to shortages and higher prices. So I think that what happens in November is going to determine whether or not we have a recession or how deep the recession is going forward. So that's what I would be watching.
Good stuff, Joan. We'll be watching you. Thank you so much, my friend.
Thanks, Charles.